Welcome to this tutorial on lessons learned, do's and don'ts related to the financial maturity criterion. In this presentation, we'll dive deeper into selected examples to help you complete your proposals. Please note that this tutorial is meant to be complementary. Please watch the Info Day presentation first on financial maturity and relevant costs, and this tutorial will dive deeper into some selected examples of best practices. The call text is the text of reference, so if there is conflict between the call text and this tutorial, please note that the call text applies. As a reminder, the business plan is a required annex to your proposal, and you now have a business plan template available to download in the portal with all of the information needed, mimicking all of the sections of the financial maturity criterion. So to be on the safe side, please use the template available. And it's very important that you provide the supporting documents to demonstrate the credibility of your plan, like heads of terms, letters of intent, MOUs, and so on. Again, follow the guidance in Annex 3 of the call text, as we said in the Info Day presentation, because it gives very detailed indications on what is expected regarding minimum requirements. Now let's navigate through each of the core components of the business plan and specific examples of lessons learned and best practices. So regarding the first section, the project business plan. A good example of best practices to provide detailed information on the scope of the project, its boundaries and dependencies with other projects. The strategic rationale being very well explained, and the application includes a detailed breakdown of CAPEX and OPEX, segmented. For example, this depends on your project, but CAPEX would include normally construction, equipment, contingencies, and so on. OPEX, for example, all of the materials, the labor, energy costs, and the projections. And then these values are substantiated with detailed quotes, with indicative terms and conditions for the main parameters. And these, from the perspective of independent experts, will certainly help demonstrate the credibility of the business plan. For revenues, importantly, for example, including an LOI that mentions prices and volumes for the intended sales, and these are aligned then with what you include in the business plan and in the financial information file. For example, in case of a partnership, you can provide a detailed MOU of the partnership agreement, as this will help to demonstrate the commitment of the different JV shareholders to the project. And of course, this will provide clarity on their roles and responsibilities. Another example, if the project is an add-on project, an incremental project, it's very important to explain how it integrates with existing operations, how it impacts overall profitability. This will help demonstrate the strategic rationale for the project and give clarity on how it will contribute to the overall business. The FIF, the financial information file, will include the financial information only related to the incremental project, as the relevant cost guidance indicates, but the business plan and the detailed financial model should provide a more comprehensive explanation of how the project integrates with the existing operations. Some common pitfalls, for example, failing to explain the breakdown of CAPEX in detail, or including different CAPEX values in different supporting documents, such as letters of support. This gives the impression that the project is probably immature, or that CAPEX is not credible from the perspective of independent experts. Or for example, if to justify the CAPEX, the study refers to a demonstration facility for which there is no evidence provided. Another thing to avoid is including assumptions on revenues and costs that are only high-level estimates, for example, based on top-down market research, while the letters of intent or MOUs included in the proposal for the offtake and the supply contracts are just generic, or some of them are even outdated. These letters do not indicate any price terms, and they don't justify the assumptions used in the financial projections. This would harm your proposal. Another thing to steer clear of is failing to provide thorough analysis of the market, for instance, only providing high-level information on potential end-user industries. Be sure to avoid OPEX assumptions, for example, related to electricity and feedstock over time that are not explicitly stated or cannot be verified, as the values maybe are only hard-coded in your detailed financial model. And a last example is don't claim, for example, in the business plan that, let's say, 60% of the production volume is already secured by the letter of support, when, for example, the independent experts go to the supporting documentation and they verify that the total annual volume specified there in the letters represent less than half of the project's expected production. Now, let's see some examples for detailed cash flow projections and project profitability. It's very important to provide detailed justification for the assumptions. For example, what you include in the financial information file is substantiated with an LOI from the main off-taker, including sales prices and volumes, which is consistent also with what you include in your business plan. Furthermore, the financial model assumes only a modest increase of the price over time, which is conservative. Please avoid being too optimistic, for example, assuming a very high RIN premium without supporting evidence, or on the other hand, avoid being too pessimistic, for instance, including a very high contingency percentage in your CAPEX without explanation. Don't forget to follow the guidance regarding weighted average cost of capital, which you can find in the relevant cost methodology. And make sure that all of the elements within weighted average cost of capital respect the guidance, and also the leverage, for example, is that of the project, not of the company. If you need to deviate from the guidelines, you can explain it clearly in your financing plan. Then some common mistakes to avoid: failing to clearly indicate if a green premium has been included in revenues, because this would make it difficult for independent experts to understand your financial projections, and also they might question the credibility of the proposal and the profitability of your project, and also the relevant costs. Be cautious of failing to provide evidence to support the main assumptions, once again. Another example is be careful and be consistent between the profitability analysis in the financial information file and the detailed financial model. And last, if your project has a negative operating cash flow, place close attention and include evidence of the willingness of capital providers to inject the funds needed. Don't assume the experts won't notice if you try to tweak the model or make unusual assumptions. Please avoid making sudden changes in costs or revenues midway through the operation period without justification. Now, regarding the soundness of the financing plan. As already said in the info day, it's critical to identify all financing sources needed to meet the project funding needs. And for example, if equity amounts are to be injected by the strong parents, this should be explicitly mentioned in the letters of support, and this should be consistent with the equity required in the financial projections. Another important point is, even if the project IRR is below the weighted average cost of capital, that is, the project is not profitable, you attach letters of support acknowledging the negative NPV, highlighting the strategic importance of the project, and describing the steps to reach approval, as well as how the funds will be raised. And these letters are signed by the board, for example, the decision makers. Some common things to avoid: submitting a financing plan with substantial funding gaps, failing to provide a detailed breakdown of funding sources, or maybe failing to identify some important funding parties. If your project will benefit from other subsidies, for example, other public subsidies, make sure to include this in the project's financing sources. And regarding offtake, for example, if the first offtake contract will span, let's say, over 15 years, Don't assume that then the banks will accept debt repayments based on, let's say, 25-year repayment profile. Make sure to include indicative terms from potential debt providers to support your assumptions. Another thing you should avoid is failing to cover the cumulative cash deficit identified over the project lifetime, because this can raise concerns about the project's ability to service debt and to cover the necessary cash outflows. Regarding support letters, don't include generic support letters from parent group companies and indicate that the group would be willing to cover for negative cash flows during operations, because this is critical. Avoid submitting a financing plan that is highly dependent on uncertain flow of funds, for example, another grant, without including mitigation measures in case the grant is not received. Now, going into the section of project funders and investor commitment. If your project involves funding from project shareholders, provide evidence of their ability to finance the project. As the call text indicates, the financial statements from shareholders and project funders are a mandatory annex and should be included in your proposal. If your project involves funding by project lenders, you can include term sheets if you have them and if the financial close date is relatively near. Otherwise, letters of support, other evidence from the providers indicating your assumptions and substantiating what you included in the financial information file is, of course, a good practice. Also, detail the status of negotiation and next steps with the banks for debt financing. This is for sure a plus. Regarding things to avoid, please don't forget to clarify the share of participation to equity of the different shareholders. Avoid unclarity on how much current investors will invest and how much is expected to be raised from core customers as part, for example, of a future JV partnership. Also, avoid failing to include a letter of support from your own company, management, and group if applicable. And if your company is a small startup and needs to raise a significant amount of funding, don't include letters that are only generic and do not indicate funding amounts. The timing of the fundraising plan should be consistent with the target financial close date. Be cautious of including letters from financial advisors helping you or another party to raise the necessary financing, as these are not sufficient evidence to demonstrate interest from potential investors. Now, the last section of the business plan template, risk analysis and management. Please include a risk heat map. For instance, make sure to elaborate also on a full sensitivity analysis, including key financial variables, increase, decrease in capex, price, volume, OPEX, as applicable to your own specific project. A good risk analysis from the perspective of independent experts. For instance, this one elaborated in detail on the project's dependency on the timely construction of the necessary pipeline connections to link the project with the offtake plans, including a detailed timeline regarding FID for the implementation of these external infrastructure projects. Please don't forget to address all significant risks that could impact the project. Elaborate on effective mitigation measures to manage each of these risks. Examples to avoid: failing to well describe the risks related to legislation requirements and their potential impact. This can raise concerns about the project's viability. Moreover, neglecting to address interrelated risks with another project on the value chain can also be a red flag. For instance, if the ability of supply for a particular feedstock is critical to the success of the project, failing to discuss the risks associated with this dependency can make it difficult to justify the project's assumptions. Another thing to avoid is failing to thoroughly assess the main off-taker's plans and timelines. particularly if they require significant infrastructure development. For example, if the LOI from the off-taker indicates that the main decision point will only be taken at a time that is beyond the target financial close date, this will certainly call into question the proposed financial close date. In conclusion, we expect high-quality evidence to support your application. Remember to read the call text, the relevant cost guidance, follow, for example, Annex 3 on the guidance on minimum requirements for project funding support and contract terms, ensure consistency across all application documents, and consult the FAQs and use the help desk if something is unclear. Thank you, and we hope you find it useful in preparing your proposal.